Alright guys, end of day webinar for today. It is Monday, July 24th, 2017. I just wanted to once again welcome everyone new to the group today. I hope you had a great day. We had a couple of really nice short side trades on today that I want to go over with a little more detail now that we're not trading and you can really focus on the detail and the entry points and stuff like that. So let's go over, guys, the first trade that I stopped out on dry ships today. This actually ended up being a small win overall, but it just didn't behave the way I was expecting. So I just want to explain why I got in where I did, why I covered where I did. So initially, guys, the main level we were watching was 250 on dry ships. It was showing some support. It was kind of showing like a breakout level in pre-market there. I'm just going to go back to, let's say, a 5-minute chart and scroll way back up here to this, put a marker at 250 and you'll see what I'm talking about. It's just kind of a spot there where it looked like it was going to kind of cup around in pre-market and it could break out. So this is what I was thinking was, I was thinking that if it broke 250 in pre, it could run a little bit, and it did. But when it couldn't find that continuation here and it started to really show some weakness, that's where I typically tend to get involved in the short side. So let's go back to the 1-minute chart where I pinpointed that entry down below here. And the first trade I took was short 249. So this is what I was looking at, right? We had a failed continuation break here. Showed some weakness, reclaimed, tried again. To me, this is just a messy chart, because this is usually a really good sign for a short when you have a failed continuation breakout, a break of VWAP, an attempt to reclaim VWAP, another attempt to break out, another fail. The thing that I want you guys to pay close attention to is the entry point I took. A lot of people will find themselves just scared they're going to miss the trade and maybe shorting through 45, which is a little too much of a chase in my opinion, or like even worse down here. So let it do its thing, let it hit low. And then on the way back up, I shorted 49 with the intention of leaving some room to add at 54. However, the 54 didn't fill, so I just took the 49. It rolled over as planned. First cover was 238, so I took a cover right there. And now the next thing we want to see in this trade, okay, is a lower high and a continuation to the downside. This is just another example of where a trade that initially starts with a small 10-cent risk can end up turning into a massive home run. And that's what we're going to show you next. The dry ships trade we took after that was the home run. So it was totally worthwhile to stick to our plan in this one. Take some profit at 38, 11 cent per share profit on 1/3 of my shares. It came back up. I was warning about the 45 holds. We knew we had to be defensive. I even said, hey, my finger's on the trigger. If we break over 50, I'm looking to get out. The initial stop was going to be 56, but sometimes you just got to get out of the way when it's not working. So when it held 45, that very last time, I thought this candle right here, I was looking for that one to break and to continue. When it didn't, I was getting ready to cover. So out at 52 and 54 from the 49 entry. So I got to cover at 38, a third, and then the other third, more than a third at 52, and the last little bit at 54. So that's how you can take a trade that potentially can turn into a home run, but this could also potentially turn into a really ugly trade if you don't follow your stop and follow the plan. So there's a reason why I lay out these stops where I do. It's very often the point where I'm looking to stop out is actually going to be the point where new buyers are going to come in and shorts are going to squeeze. So we almost always tend to get out of the way just in time when something like this happens if we're on the short bias. And that doesn't mean that I'm done with the stock. It just means that one time the risk reward was there. The first target was there, which is nice, mitigates the risk completely. And then if you want, you can stop flat. I mean, you could even have stopped flat at 50. That would have made a lot of sense. I just wanted to make sure I wasn't getting wicked out, because sometimes you'll get like a quick push over 50, reject, and then back down. So I just wanted to be sure that I wasn't going to get wicked out. Once I saw the way the volume was coming in there, it was pretty obvious we were going to squeeze, so easy to dodge out of the way of that. So let's move on to the second trade, and this was easily the best trade of the day for me. I re-entered this trade after the squeeze. There's two things I want to point out. One is I actually did see a spot to enter here. I saw a little spot right there where I may have taken a starter at 275 with a stop just under 285. But I didn't really either I decided not to take it or I missed it. I can't really remember. I just was watching and I think I hesitated. And so I actually just really waited for this to do its thing. I let it come right back in. And this is where, guys, this is a really important thing to remember, is the level of patience that it took for this whole squeeze to happen. It took almost 45 minutes, and then it's hard to not get it just emotional and think that you're going to miss the trade again. It came all the way down to 240, and I did not short the stock until it came back to me. It came right to where I wanted it. I knew I wanted it towards 265. I wanted kind of like a measured move back, so kind of like a lower high up here. I was looking for that scale in area right there. The plan, guys, was short 264 with a stop at 276. So it was a 12-cent risk trade. What I really like is when I see, like, you know, an entry that is like pinpointed to the point of less than 5 to 10 cents risk, and then a massive reward at the end of the tunnel. So we got 264. I think it's still running lower, but 264 entry, guys. The initial stop on this was 276. This is a very typical trade for us too in terms of the entry and stop. So 12-cent risk. I wanted to give it a little bit of a wider risk. The reason for that, guys, is because I was kind of worried that we might have a bit more of a measured push back to like 75. And what I mean by that is when I see a move that's this large, a lot of the time I notice that we'll get like a kind of like a halfway retracement. So I'll kind of leave a little bit of room and just kind of in case. So we had some really nice, almost immediate reward on this one. The 264 entry maybe got like 3 cents above my entry, and then we kind of started the whole 55. So I didn't like the ads until I mentioned in chat and on the stream that I wouldn't really like ads until we got through this base. But I took actually a decent position there, so I decided not to add, but we started to wash out really nicely about 15 minutes later. And I'll go over my exit points, which I actually mapped out on this journal entry. So we got some covers at 249-ish. Took some at 228. And that second cover at 228, that really, really helped fully mitigate the risk on this trade. I was feeling really good about having a nice wide stop and letting it work for us the rest of the day after that. Because sometimes it can be really hard to hold all day short through this kind of grind in the afternoon, especially when you're like back over 50 EMA. But for every trade that I took today, or for every exit that I took, I just kind of moved the stop down a little bit, and we just sort of followed the plan, you know. And although it was kind of tempting at times, or a little bit worrisome at times right here to maybe cover out the rest, I was just looking at the big picture on this one, and I think that once we were able to mitigate the risk enough, get that cover at 28, there's really no need to cover. I think my stop point here was 56, so it pushed up enough, but not enough to stop me out. Rolled back over. I was mentioning how important the 35 area was. Once 35 became resistance, it was looking a lot better. We got this really nice wash here just during lunch between 1 to 2 p.m. and I was actually really glad that I didn't go to lunch today, because I would have actually missed that fill. I covered some at 211, and again, just patience, let it come all the way back. It did grind back up to 40. At this point, my stop was moved down to, I believe I had it at 47, so it came pretty close there. But it ended up rolling over again, and I actually had an idea to add, and guys, this would have been the bread and butter. Unfortunately, I didn't get the ad, but if you remember what I was saying earlier was look for this to, once 35 becomes resistance right here, I was looking for this to kind of like touch 20, put a lower high, and then short. That was the idea I was mentioning in chat and over the stream a couple times. I didn't get the ad, and this would have been a monster if I had added. Now, the plan is here, if I had added at 25 or 20, the stop would get moved right down to 235, 236, no exceptions. You're looking for an end-of-day fade with volume, right? That end-of-day fade was beautiful. I got my last cover at 193, which I thought was good, but now I'm looking at it and it's at hit 165. So maybe a little premature in the exit, but man, I was pretty patient with this one. I held it all day. For those of you that are interested in a better exit strategy for your longs, if you're looking to maximize your winners a bit more, I have a very specific exit strategy that I like to use. In this case, I actually just took a chance on it and covered early. Regretfully, if I had followed my exit strategy plan that I usually use, I actually would have been still in this trade. But if you're interested in that, I'll post a link for it in chat. It's a members only video in the back end of our website. Very helpful. Some people have messaged me and said that they started letting their winners run a lot more since using this strategy. So I'll post that up for you guys in chat. But overall, guys, this was a grand slam on dry ships today. It was an all-day short. Zero stress. I mean, zero stress. From entry to exit, there was no pain on this whatsoever. It was just profit taking and patience, okay? So dry ships, really nice job, guys. And for those of you just joining us today, if you had access to the shorts, really great start. GNCA, I'll cover after tier. TEAR, this was frustrating. I had a very strong short bias in this morning. The plan on this one was to not short into morning momentum. So if the stock has SSR on, short sell restriction, and even if I have the strongest short bias, I mean, 12 million share effective shelf, a lot of fundamental reasons to be short bias. I still need the technical reason. I still need the good risk reward. I still need everything to line up properly. But shorting the front side of a giant volume opening push on tier is not really my style. I think that by doing that and getting the habit of doing that, you're going to end up taking losses, potentially big losses. By being, that's if you're not sticking to stops, or if you're just, randomly shorting without a plan. For me, typically what I like to do is if the initial move like this fails, which it did, then I'll start looking for lower highs or somewhere to enter in here. This became really frustrating to me because the opening squeeze rejected very harshly, and it dipped so far down after that rejection that I was totally interested in shorting anything towards 3 right there. I'm going to put a stop at 311, I think, would be the plan. And it just couldn't tag me. And it just kept fading and fading and fading. And then finally I said, you know what? It's too late. Forget it. I don't chase stocks, all right? Like, I don't like to be part of the herd that's chasing. I like to be ahead of the game, ahead of the curve, ahead of the people that are shorting, ahead of the people that are going long. But it did give this nice little interesting opportunity where it bounced up, and probably all the people that chased it short down here got squeezed out. So I did short 284 right there. And this isn't my favorite position to be in, but given the circumstances, definitely a strong possibility or a potential possibility of the stock having an offering, for example, and some other factors like the short bias and being under VWAP, everything was fine for me to enter there. The stop here was 96. It actually came 2 cents away, so it did kind of get against me for a little bit. So it wasn't the best entry. It wasn't my finest work, but it was a good opportunity to get our feet wet there. And I didn't take a whole lot of size. I just got in, sat through that, and I was thinking that in here would be a good place to look for an ad and then move the stop down to about a 91. But the volume really got low. I decided not to make any ads. I was looking for a first target cover at 268, and it just ran out of volume. It just couldn't do it. It couldn't get anything going on. I held it all day. I stared at it all day. I tried really hard to be patient. Dry ships was working really well, so that helped with my patience on tier. But ultimately, guys, once it didn't break the lows right here, that was my cue to exit. So I covered at 77. So initial entry was 84. I covered at 77, 82, and 83 for peanuts. So just a very small trade there. But again, I think the thing that we want to drive home from this webinar today is that it's okay to take a 10-cent stop on a planned trade that has a very good risk-reward outcome. And it's okay to take that dry ships. I wasn't really annoyed at all that dry ships reclaimed. I followed my plan perfectly the first time. Risk reward was on point. If this continues lower, we're going for a grand slam. Otherwise, get out of the way. I'm really, really strict about my timing of these entries and also of sticking to my stops. So this could have easily been a disaster, but It was totally stress-free. Just get out of the way. We had the signal that said get out, get out. Got back in when the timing was right and absolutely crushed this trade. So congratulations to everyone that got a hold of that one. Unfortunately, tier couldn't get working for us, guys. So my plan tomorrow is to reattack. I think we're still going to see a lot more backside in this one this week, but I just didn't want to find any volume today. So maybe tomorrow we'll look to reattack it, especially if we get a retest towards the 315 area. That might be an interesting place to look for an entry. I'm still thinking 240 on this one by end of week, but we'll see. That's 100% speculative, and of course it depends on proper intraday setups with good risk reward. Other than that, guys, I had a really nice short on AEZS on Friday. I decided today not to attack it. I got really busy looking at tier and dry ships. I missed a really nice opportunity there, but some of you guys took the idea and ran with it, shorted it, got a nice trade, so congrats there. It's been a little bit of a grinder this afternoon. I still think this one's on the downswing now. Clearly the 15-minute chart's rolled over quite heavily. Probably next major target on this one's going to be towards $2. My target today on it was 235 if I had taken the entry, which I didn't, and it reached it within pretty much within the first 30 minutes of the day. So that was surprising. I thought it was going to take a little bit more time to get there, to be honest, but congratulations everyone who shorted AEZS. Tough day for the longs out there. There really wasn't a whole lot of great long setups. Tops, this stock is a turd, but if it had gotten over the 58 area and started to consolidate, I would have been looking for a possibility of a squeeze just for a trade. I couldn't get anything going on with that one. There was no signal, so no trade. The other one was ELTK. I was going to potentially look at a long on this one if the setup was there. And again, not marrying it, but just looking for a setup if it's over 20, if it's trap shorts. If it's got a good risk reward setup, I would have probably went for it. But the other idea in this one was if it couldn't get the trigger, if it couldn't hold over 20 long enough to give us a trigger, to short through 115. And that's what ended up happening on this one, was 115 broke and ended up being a nice short. Ideas targets in that one were 106, 102, and I was thinking 96. So that was pretty much spot on. And for those of you guys who have Shirt Trader, this one was easy to borrow, so that would have been a nice easy trade. The idea through the 115 short would have been a stop at 22. So again, 7-cent risk, 3-4R on the trade. Really nice risk reward. So guys, hopefully you can just even on your first day here get an indication of what kind of things we're looking for, how important patience is with both the entry and the exits on our trades. With a trade like dry ships where you're shorts 264 and covering 193 on 10-cent risk, that makes up for 3 or 4 stops that you might take here and there that are 5 to 10 cents. You need to really be able to accept that those little 5 to 10 cent stops are going to happen from time to time. They're inevitable. You can't avoid them, but they're just part of the overall plan. There's a reason we take the stock out when we take it out. There's a reason for our entry. There's a reason for our exit, and there's always a reason for our stops. So, guys, really nice job on dry ships. We may look to attack this one tomorrow. If it has a healthy bounce towards 210, that would be the next area of interest for me for a reshort, that big support break. Typically, areas that have a huge amount of support like that like to get retested, so that would be potentially an area to look at for tomorrow. TEAR, I'm going to be keeping an eye if we get a bounce to 315 tomorrow. ELTK, that's dead to me. Tops is probably dead to me. Dry ships, 210. GNCA, actually pretty strong close in this one. And by the way, guys, I was going to cover the one long signal I had on GNCA. It was just going to be a scalp trade. I actually missed the punch on it, unfortunately, but I did get a long signal right here on GNCA. And if you remember what I said, as I was trying to take the trade and I missed it, maybe some of you guys got it, but I suggested just taking it out right away at 602. I didn't expect a whole lot of follow through, but it was a legitimate long signal. 89 to 90 with a stop at 84. So really tight, 4 or 5 cent risk. Just look for that quick 15-cent reward and move on. That was the trade I saw there. I didn't like it back here as much. Guys, I warned not to buy it here. This is a common amateur mistake. Oh, cup and handle pattern. No, not really. It was a little too extended there. There's a lot of reasons why I didn't like that for long. It was much, much more attractive after it dipped, had a nice measured correction, then held a higher low. This is where I got my signals, so that's where I like to get long. Not much to say about that one. And like I said, it was a quick trade. There would have been a quick trade. I liked the idea of just taking it out right away, not really messing around with it, or at least taking out half of it. And then if it starts to fail right here, you stop the other half out right around here. Okay. Guys, I think overall this was a really great start to the week. I'm hoping we get a few more long opportunities tomorrow. But really happy with the way we traded today. Really, really nice patience on letting that dry ships trade work out completely. It still could have been even better. I'm always going to look at some critical points in my trading so that we can all continue to grow and develop. I love talking about the winners. I love talking about the losers. I love talking about what I could have done better. For those of you guys who, I had a lot of patience in this trade, but this could have been a little better. So take a look at the video I'm going to post in chat here. It's an exit strategy that I like to use for the last 1/4 of my shares. Typically, once I've reached 3 targets, obviously the risk is off. You're in the money. At this point, you just want to make sure you're maximizing the profit as much as possible. This is one of the harder things people have trouble doing, I think, is maximizing the reward. And it really does make a big difference to your bottom line. So I want to make sure that we're always following this system, the way that it's developed, so that we can maximize the reward in our trades and minimize the risk. So guys, I really hope that this was a good start for those of you who just joined us today. And once again, just welcome to the group. Hopefully a few more long trades tomorrow, but we did what we could with what we had. And I'm looking forward to a good week, guys. So we'll see you first thing tomorrow morning. And as usual, this webinar is recorded, as they all are. It'll be posted in the chat room after I get back from the gym, usually around 9 p.m. Eastern with the watch list. So yeah, you guys can watch this one later on if you want to go over some of the points on it. All right, guys, have a great evening. We'll see you tomorrow.